Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then bounce around the market and look for something to do. But this week, we're going to have a slightly different change of plans. So put on your helmets for this one. It's going to be a little bit more in depth, and then we'll go from there and make our trade for the week. So if you've been watching the markets, you've seen obviously the market's been in a pretty much a free fall for the last few weeks. This is the S&P 500. This is the Russell, fairly similar, and the NASDAQ obviously as well. But here's what we're going to point out today. I'm going to zoom in here. So what I'm looking at today is a couple things. Number one is I want you to notice the size of these candles, because that's the size of the move on a given day. Right? If you look here, even if you look here, these big ones, essentially these last few months, you can see that the candles are a certain size. But over the last few weeks, you can see these are big moves on a daily basis. I'm going to zoom out slightly just to compare it a bit to itself. And obviously when that happens, when you have these big moves, that means things are extremely volatile. And you can see they are. The volatility is at about 86. But here's the key. As volatility traders, and this is where I need you to put your helmets on, it's going to get a little deep. When we're trading volatility, our assumption with volatility is overstated, meaning what the market is saying is going to be the move. In this case, let's say this big move right here is actually going to be smaller than what was expected by the market. But I'm going to go up here and just show you how this has changed with this radical new market. Don't worry about the formulas. Let's just go back to this day. Essentially on this day, which is only a couple days ago obviously, the market was expecting about a 4% move on this day, which based on a price of roughly 300 would mean about a $12 move. But if we look low to high on that day, right, the low to the high, you can see it went from roughly 310 to 325. So instead of a expected $12 move, we got a $15 move. This is where the market has changed recently and why it's gotten really tough to trade. Normally the way we do things is we would expect the market to price in a volatility expecting a $15 move, and we might get a $12 move. And you can see that's how we make our money, because we would make a bet based on this, but since the market didn't move as much, we did okay. But now things have reversed. Now the market is expecting this to happen, but instead it's moving this much. And that's why these trades are getting much more difficult to make and be successful with. So what do we do in a market like this? Because normally speaking, with high volatility, we're going to sell things. But that means we take more risk for less profit because there's usually a higher chance of success. But in this market, because it's not following the volatility rules of the norm, which is I just showed you, expecting a bigger move, getting a smaller move, it's done the reverse. We're going to shrink our size of our trades. And essentially, we're just going to go for 50-50 bets in this market, risking less to make a little more. Because at this point, the volatility is out the window. It's not doing what it does, let's say 90% of the time. What do I mean by that? So in this case, with volatility the way it is, normally I would say if you want to pick a direction, if you want to either sell a put vertical because you thought the market was going up, or sell a call vertical because you believe the market was going down, instead, again based on the volatility difference, we're going to buy verticals instead. So we're going to buy a call vertical, or we're going to buy a put vertical, which means we're going to risk less to make a little bit more. Because it's a 50-50 bet and the market's kind of erratic, we don't want to risk too much. We're going to keep our trades really small and keep our risk really small. So if we go to a trade page, what that looks like is we'd come here to the 40-day window for tomorrow. That'll be 39. And I've already set this up to make it simple. What we like to do is the stock is essentially at 309. When we set up verticals, if it's a call vertical, we like to buy one strike below the stock price and sell one strike above the stock price, which in this case is perfect, right? 309 is right in the middle. If I can get this arrow to work right there, 309 is right between those two. And on the flip side, if it's a put vertical, we're going to buy one strike above the stock price and sell one strike below the stock price. Again, the exact same setup, the only difference being this is betting the stock is going up and this is betting the stock is going down. And also you'll see we're risking a little less to make a little bit more. So in this case, Obviously, it's never going to be the exact numbers, but in this case, we are risking 86 cents, and because it's $2 wide, we're just subtracting it from $2, meaning in this trade, we can make $1.14, which equals $114. And up here on the call side, we're paying $1.16. Again, we subtract that from the $2 width, and we end up with a potential profit of 84 cents or $84. So these are the kind of trades in this market we're going to start making. Long verticals is what they're called. Long call vertical here means we think the stock is going up. Long put vertical here means we think the stock is going down. Again, we're all defined risk. We know exactly how much we can risk and exactly how much we can make. And these are lower probability trades compared to selling verticals. But again, because the market's turned on us volatility-wise, we don't want to risk more to make less because it's probably not going to work in our favor. We'd rather go with more of a flip of a coin kind of trade. Risk less to make potentially a little bit more. And that is our trade depending on which direction you want to choose for tomorrow. Hello everybody, Cal here with what I believe is an exciting opportunity. But just before we get started, I want to make sure you're aware that I do have quite a few courses up on Udemy. All the ones that are available are listed here. And some people don't know that these first three here are an actual three-part series. So number one in the series would be understand options, number two would be basic option strategies, and number three would be make and manage profitable trades. Again, if you're taking one, now you know that it's a three-part series. You might want to take part two and three, or if you're in two, take three, etc. And then I have a couple extra courses there as well. But the purpose of this video is because I want to get you up and trading as quickly and confidently as possible. And the best way I've come up with to do that is to create a trade alert so you can watch me trade in real time. You can trade alongside with me. You can watch me trade. I send out 2 to 3 real-time trade alerts per week, and you can sign up for this by going to sharpertrades.com, click on the products button, and you'll see these two alerts pop up, Basic and Pro. They're both the same alert. The only difference between the two is Pro will give you access to all the courses I've created. But I want you to do this with as little risk as possible. So if you go to the Sharper Trades page and you type in this code, BASIC1 YTB, you will get the first month of the basic alert for only $1. So I can't really do it any cheaper than that, but I want you to have access to it so you can see if it's something you want to do and learn from. Again, you can cancel at any time. So in the first month, it's only $1. If you continue after that, it'll go up to $49 a month moving forward. But the first month is about as risk-free as you can get. It's only $1. And also, if you sign up for the Pro at the same time, you'll get a discount on that one for the first month as well before it kicks into the $99 a month. So, love to see you there. Love to get you up and trading as quickly and easily as possible. Take care.